Retail giant Walmart reported its quarterly earnings this week, and they had a substantial warning about consumers. Now, it wasn't a warning about Walmart itself. In fact, Walmart is benefiting from what they are warning about. What they're warning about is that even wealthy customers, even wealthy Americans, are having trouble in this current economic climate and therefore are becoming Walmart shoppers. By far, their largest growth category came from people making $100,000 or more. As Walmart CFO John David Rainey told Bloomberg, we are seeing customers trade into Walmart. And by trading into Walmart, he means they can't really afford to shop at other places. Now, the CEO of Walmart said, no, Walmart's investing in all of these services and upgrading our stores and everything else. He said, basically, we're focused on what we're doing and how we earn business with customers and members. We've been known for price forever, but we're increasingly known for convenience. So whether the environment is inflationary or deflationary, whether customers have more money or less money, if we're doing a good job on the items and prices and the service we provide, saving the money and with pickup and delivery, for example, we can continue to grow share. And of course, nobody bought that at all. He was trying to justify Walmart's investments when he was basically saying, yeah, we're having a good time now because the economy is indeed bad. And that's what you see in a lot of these retail stories and other stories. When the economy's bad, they tend to do well. So good things for Walmart are generally bad things for the rest of us. And with Walmart particularly pointing out and specifying and pointing at wealthy customers, that's how you know the situation is really developing in the wrong direction. It's understandable why lower income consumers who are normal Walmart shoppers anyway would be under pressure given the price imbalances over the last couple of years. But now, if the wealthier are trading into Walmart, what does that say about the economy? So, Steve, Mr. Van Meter, let me ask you that question. What do you see about Walmart with wealthier individuals trading into their shopping, their experience? Is it really about customer service and upgraded stores, or is it just the economy sucks?
Jeff, when I saw that article, I laughed because, of course, the CEO said, look, we're doing these great things and wealthy people just can't wait to shop at Walmart. It's like, no, that's not it at all. We do know that wealthy people can still afford things, but they're starting to get squeezed. And that's the whole point here, because when an economy slows down, you expect the lower income cohorts, they're going to get squeezed anyways, but they're already shopping at stores like Walmart. They're trying to save every penny. The difference they're going to have is they're going to end up spending less. But when someone who's wealthy now maybe sees their car insurance rate go up on all their expensive vehicles, all of a sudden they've got to look to save a dime. They don't care now that Walmart's making changes. What they care about is, I'd love to go to the expensive stores. I really like the experience there. But if I can save a little bit of money, it makes a big difference. So as we look at the economy now, we start to think, are we in the midst of maybe a no landing or soft landing scenario where we would expect a certain cohort to get hurt financially? Now we're starting to see it move up the chain. And that's the dangerous part. When rich people start to feel it, Jeff, it tells you we're headed into a recession, not just a soft landing here.
Yeah, the trade into it's interesting that he used that phrase because that's something we've talked about repeatedly. How this is not inflation. When it's inflation, prices go up and we all spend more, but we all spend about the same. We don't make massive adjustments to our budgets because we have this inflationary process going on under all the while underneath. What he's basically saying is just what you have been saying, Steve, that insurance costs go up, which forces them to do other things the rest of their spending behavior, their budgets. So if insurance costs go up, now these people who would rather shop at a high-end store are now shopping at Walmart, and not just for some of the discretionary items. They're going to Walmart and buying tons of groceries. They're trying to save on their grocery bill because they're being squeezed in all these other ways. And if the labor market was indeed as robust as many people claim it is, this wouldn't be happening because people would happily absorb these costs. Well, they wouldn't happily absorb the costs, but they would be able to absorb these costs and continue on as if they were unbothered by any of it because they'd get a bigger raise at work. Or if they didn't get a raise at work, they'd go find another job that paid even better, which would be easy to find in a robust and booming economy. So Walmart is basically telling us from its perch in that particular part of the goods sector of the economy that it can't be going well throughout all of the income tiers are going into Walmart. So it's great for Walmart, but it's really not a great sign for the overall economy.
That's right, Jeff. And this is what we typically see going into recession. Walmart tends to benefit as people trade down. But you made a very interesting point. Even Walmart noted it's people coming in for groceries. So it's not like these rich people are like, wow, these stores are so nice now. I've been waiting to shop at Walmart so I could save some money and have this great experience. Because they said, and you pointed out, the discretionary side is seeing a cutback in spending. That is the big indicator here. And what's kind of surprising to me, Jeff, is when we look at the U.S. equity market, well, we see stocks going to all-time highs. And you go look back to Alan Greenspan, former Fed chair, you talk about the wealth effect here. So the rich people should be looking at their brokerage accounts, their 401ks, their IRAs, and be like, wow, I'm richer. So you know what? Maybe I'm being squeezed a little bit today and it's getting a little uncomfortable, but I could still shop at the nice stores. And that's what we're seeing here is a shift in their mentality. They're seeing that, yes, the equity markets may be high, but things that are going on that are going to affect my finances could be far worse than that. That's the warning sign we're seeing here.
It's funny, even some of the stock analysts who look at Walmart are connecting Walmart's good fortune with recession risk. I'll give you a quote here. This is from Brian Yarborough, who is an Edward Jones analyst. And he said, historically, Walmart has not been able to keep its customers after recessions end, but maybe this time is different as the speed of its delivery improves and its marketplace gives them access to better merchandise. Basically, he's connecting the fact that Walmart's doing really good right now. Its stock is way up, but maybe we should look ahead and maybe Walmart won't be doing so well after the recession ends. So he's basically maybe not on purpose, but inadvertently admitting this is a recession signal from Walmart, and we're already looking ahead to the recovery after the recession ends because this is solidly recessionary.
Yeah, and then you start looking beyond that a little bit. We saw the retail sales data. We see a continued deceleration. I believe the month-over-month number was a whopping 0. And this is just what we're seeing.
Steve, it was positive. It was positive when you go out 3 or 4 decimal places. So it wasn't exactly 0.
Okay, so it was slightly better than 0, but this is exactly what we're seeing happen in Walmart. The discretionary side is spending less. People are looking to save money. They're cutting their spending, and that's now showing up in the retail sales report, which we've noted when we look, of course, at the factory level. We see the Fed surveys, Jeff. I know you look at those too, where we see new order demand go down. And lo and behold, it's all starting to flow downhill and show up in the customers that are showing up at Walmart. It's very interesting to me that if this is the beginning of where we're at, where is it going to be when we're actually in a recession that, of course, the government's going to put on those gray shaded bars on the St. Louis Federal Reserve website? When we look at those charts, we're not there yet. But if this is just the beginning of what's coming, it's going to be interesting because it's telling me a lot of other retailers are going to be sitting on a whole lot of inventory, and that sure doesn't lead to inflation.
Yeah, it's interesting. We had that little rebound at the start of this year, which got everybody thinking, okay, we had the consumer prices moved up on insurance costs and oil and gasoline and all that stuff. But there also was a sort of a bounce in even the manufacturing sector. Remember, Steve, the ISM's manufacturing jumped above 50. It's like the first time in a year and a half. Even the S&P Global's number, that one moved above 52. And so for the first couple of months of the year, it looked like, okay, we got through the downswing at the end of last year and things are starting to pick up a little bit. But then it's as if somebody just lowered the boom again in March and especially April and now May, where even it's not just Walmart. Of course, Walmart is consistent with all these other statistics that we have on retail sales, industrial production, Fed surveys that are all turning lower. But the difference this time compared to, say, the last time, like at the end of last year, is that the labor market keeps coming up in all of the surveys, all of the corporate announcements, all of the data too, that is suggesting that the weakness this time is really different. It's not just consumer price pressures. It's not just incomes that haven't been able to keep up with them. We're now seeing consumers themselves say, yeah, we're still getting squeezed on our budgets and it's causing us to alter our behavior. But we're also really afraid of our job, and we're afraid of what would happen if we get, say, cut in hours, if we get converted to part-time. What would we do then? And that is causing a lot of these people too, you have to believe, to shop at Walmart as well. It's not just people who are suffering from price problems or are have actually lost a job or got a cut in hours. They're worried about it, and so they're thinking, I better act today so I can maybe save a little money just in case, because the just in case chances are rising.
Well, it's interesting you mentioned saving, because what do we see with the savings rate? It's just outright plummeted. Of course, there's your argument that maybe there was some inflationary aspect from people dipping into their savings, but now they're right into the red line. We see credit card data from Liberty Street Economics saying, look, there's about 18% of the people that are maxed on their credit cards and in delinquency. This is not good. And so you think about these wealthy trading down. And what about the people that work at the stores for that cater to the wealthy? What are they going to see? We're seeing less foot traffic. And if you're the boss and you're looking at sales and revenues, you're thinking, wait a minute, I have less customers. And what do you need if you have less customers? Well, you need fewer employees. You need less hours worked. And I think that's what's happening, Jeff. And we talked about this before, because you pointed out that this increase in oil prices that came back earlier this year was going to have a dent in the economy. And you were spot on, because consumers did react just as you said they would. They wouldn't be able to afford other things. Now they're not. And what's happening is they're going to work themselves and looking around like, hey, there's not a lot of customers. And as you just mentioned, that means hours get cut, jobs go to part-time, maybe even jobs get lost, which is notable because we saw in the continued claims number is quietly getting back up to 1.8 million, because it's not going down. That's the problem. More and more people just don't have the income.
We've been talking about this since last year. Really, again, September and October seem to have been the key inflection point, and not just in the U.S. economy. You see it around the rest of the world too, but it shows up time and again in the U.S. economy. And I think everybody saw the same thing. Even the Federal Reserve talked about it. Christopher Waller mentioned it actually, I think his whole speech was something had changed. And so there was always this disagreement, as well as, some lack of clarity about what that actually meant. For people like the Fed, that meant that the economy was red hot last year and it just slowed down a little bit, and that would be great. We glide gently into a soft landing, disinflation and everything else. But there was also the implication that last year was not red hot, especially that third quarter where GDP was up, almost 5%. Maybe that was more of an illusion than it was actually fundamental, support and strong economy. And then the slowdown in October into the end of the year wasn't necessarily just a change in speed. It was actually a change in direction. But as we know, these things take a long period of time to play out. And so with the benefit of hindsight and now perspective, we're more and more seeing these signs that it was not a change in speed. It was a change in direction. And that's kind of what Walmart's saying. It's not just Walmart, KFC, McDonald's, restaurants, retails. And funny thing is, Steve, I don't know if you know this, the mainstream media has invented a new term for how we all feel this direction change, this recession, but we don't need to call it a recession. They've called it a Vibecession. This is what Bloomberg wrote. The Vibecession is alive and well. Consumer sentiment plummeted to a 6-month low in early May, but it's not just bad vibes. High costs of living have battered consumers, pushing U.S. household debt to a record. Now late bills are growing for every type of loan, from credit cards and auto loans to mortgages and more. And I'm thinking, you're not describing a Vibecession. You're describing a recession that you don't want to admit is actually a recession. Because I think, again, most people have this, the mainstream view that the economy was red hot. It's great. So you don't just go from red hot to recession seeming like that, although many people believe that's how recessions develop. They're not really willing to give up the idea that the economy's strong. And so it feels like a recession, but it can't be because some of the numbers look really good.
Jeff, I will love for the day when Fed Chair Powell gets on the podium and says we're in a Vibecession. Man, that will be the day. If there's a drinking game on that day, I will have a drink for him, because that would be incredible. But you're right, things did change, and something fundamental changed. And yet we continue to hear from the central bankers of, well, everything's fine. Inflation's still too hot. We need to stay higher for longer. And you look at the labor market metrics, you look at initial claims, continued claims, and non-farm payrolls, and it's like, well, everything looks okay. until you realize that they're not okay because they came off of very low levels. Yes, they're below historical norms, well below that, and everything looks okay. But fundamentally, something is indeed wrong with the economy. We continue to hear from these surveys. Backlogs continue to get worked down. I keep asking, when do they run out of them? Because the day these companies, these manufacturers end their backlogs, they look to their new orders, there's going to be a lot of people that hit the unemployment line. There's going to be no option. It's not just going to be here in the US, it's going to be all over the world. I mean, we look at China. What is the government trying to do? Just force the manufacturers to make goods to try to sell them in other parts of the world. And you think, well, why would they do that? To keep people employed. But the problem now is we've gone from this dynamic where there wasn't enough supply to meet demand. Demand has been clearly changed, as Walmart's pointing out, and supply levels are just getting higher and higher. The question is, when does this all grind to a halt?
Well, that's the very thing that OPEC has been doing for the last year, right? They've been saying we expected demand to be a lot better than this. Now we've got an overhang of global supply. We've got to cut it back. And every time that OPEC says, oh, things are turning around, what do? Well, we got to extend our production cuts even further because demand isn't coming back. But I want to come back to this Vibecession crap because, it's basically saying that most people are feeling this recession stuff. They're feeling they're left behind. They're feeling the labor market isn't keeping up the way the statistics would like. And the idea of Vibecession is basically to say, well, yeah, we hear that this is a common complaint among a lot of people, including people who make more than $100,000 now spending at Walmart or shopping at Walmart. But it can't be a recession because the NBR hasn't said so or Jay Powell hasn't said so. And I think that's the most ridiculous aspect of it, that most people have a better sense of the economy than what we give out in the mainstream because it comes down from the government, it comes down from the central bank. It doesn't come from the bottom up in actual evidence. The Fed isn't actually data dependent. They're just focused on the CPI and hoping that nobody criticizes them too much when it's too high. When they should be looking at all this Vibecession stuff and saying, yeah, this is not going really, it's really not going well. And that change back in October wasn't actually a slowdown. Again, it was a change in direction.
Yeah, absolutely. And because, like you said, the consumer here is really telling us things have changed because, again, when wealthy people start shopping at Walmart and they're shopping for groceries, they're here for staples. And I think that's the key point here. They're not going there and saying, wow, I didn't know Walmart had all this wonderful stuff for cheap and I got to load up and fill my mansion full of it. No, they're saying, look, I got a family to feed too, like everyone else. And I've got high expenses. I've got maybe a big mortgage, car payments, insurance, you name it. They've got it. And they're looking to maybe save, $50, $100 a month or something by trading down. That's how bad it's starting to get. If this is indeed the beginning, where we're going to be in a couple months is going to be, well, quite frightening.
Where we're going to be in a couple months is we're going to be talking about how great it is for Walmart because, again, Walmart is a recession signal and they are doing really well. The booming business at Walmart is not a good sign. Big thanks to Mr. Stephen Van Metre, as always, for stopping by. If you want to explore why China is dumping a record amount of U.S. treasuries and what's going on there, this video I've got linked below. Thank you very much for joining me here. Huge thank you, Eurodollar University members, Eurodollar University subscribers. And until next time, take care.